So imagine what calculators did to our ability to do math in our brain. Imagine what AI platforms can do to our intelligence. And so I think as Bitcoiners, we should think about something like not your AI, not your intelligence kind of thing. And so that's what we want to fix at Tether. The beautiful thing is Tether has the resources to make it happen, given the profits that we had in the past years, and we're going to likely keep having.
What's going on, guys? Today we've got an amazing episode with Paolo Ardoino. He's the CEO of Tether, and in this conversation we went through it all. We talk about the recent stablecoin regulation, the US strategy, Tether's coming to America, and he explains exactly what they're going to do. We go through the macro environment, the financial breakdown of how much money Tether made in the first half of the year. We talk about the difference between USDT and the domestic stablecoin that they want to launch, and then we get into fun stuff like artificial intelligence and what Tether's doing on that front, including the investments they're making. We talk about gold and why that's such a big focus for them. And then we talk about the brain-computer interface that Tether is funding because of what they think that can mean for the future. This conversation goes very wide-ranging, and it helps us better understand what Tether's doing, how much money they're making, and where that money is going. Hope you enjoy my latest conversation with Paolo. All right, Paolo, I thought a great place to start this conversation is Tether is coming to the United States. Historically, you guys have done a fantastic job of going to emerging markets, getting 400 plus million people onboarded to the US dollar and stablecoins. But now when you come to the US, this is a whole new game. What is the plan for Tether in the United States?
Well, first of all, something changed. That is the Genius Act that made it possible. So we're very thankful to the president and all the administration, as well as the lawmakers, to make it possible. Look, first of all, Tether is the company that created the first stablecoin in 2014. It's 11 years in the works. We are grateful and honored that the most powerful country in the world is looking at the technology that we created 11 years ago and now is regulated on it. So that is something that we were hoping, because for any industry to become mature, you need proper regulations. And interesting enough, the Genius Act allows not only, of course, Tether to come and explore the United States, but creates an even playing field also for all the other financial institutions that now feel more confident that this is a technology, that is an opportunity that will stay, that will remain, and will continue to grow. We have been advocating for such a long time how stablecoins and USDT in specific are the best allies for the United States. In the latest station, we disclosed that we had more than $127 billion of US Treasuries. That is more than South Korea. So we were able to pass South Korea. We passed Germany and then South Korea. And then I don't know what is the next one, but I'm pretty sure that maybe by the end of the year, we will pass another nation. It's crazy to compare ourselves to nations, but it is what it is. And after that, on top of that, we have been bringing the US dollar to basically 500 million people in emerging markets. So yes, we are looking at the United States. We want to open up shop in the United States for one of our new business lines. But we feel that we have been probably the best ally, one of the best allies of the United States all along. Sometimes it took a little bit of time to make it clear, maybe, but it's without doubts one of the best businesses out in the United States out there, when especially in the trenches in emerging markets, developing countries where maybe the US presence is not that strong. But you see BRICS presence and big competitors of the United States very, very active in trying to de-dollarize the world. And that's our plan. And now we can come to the United States and launch probably a domestic stablecoin very soon.
Okay, let's explain to people in the emerging markets as kind of a lens to what could happen in the United States. I've seen a lot of pictures online over the last maybe 6 to 9 months of people in South America or other geographies take a picture at a store, and the store's prices for the goods they're selling are priced in USDT. So this whole idea of like, people are trying to drive adoption, not only as the individual users who want to pay for things or send money to their friends and family, but actually the store owners themselves are just using it as the pricing mechanism, which then incentivizes people to use USDT to purchase the goods. In the United States, we already price everything in dollars. We already use US dollars. And so really, if you have a dollar, the rails on which it is seems to be the big innovation here, right? You have a cheaper, faster, more efficient way to actually do this. There are some hours of operations, arbitrage with the traditional banks in terms of accessing your money versus USDT, et cetera. So how do you use the technology advantage you have, even though it is the same exact product that already has great adoption in the United States in terms of the dollar? Like, what is the actual plan? Do you go partner with the banks? Do you go after kind of a bottoms up adoption strategy? Like, how do you attack this?
So that's a very good point. The way I try to describe the difference between the United States and the emerging markets, like pick an emerging market like Nigeria. I would say that in Nigeria, the quality of financial transmission rails is between 10 and 20%, right? In the United States, it's 90%. So almost like the United States is almost perfection. So if in Nigeria you put you put a stable coin in Nigeria, you would improve that financial rails from 10, 20% to 50%. So you get like a 30% gain. In the United States, you go from 90% to 95%. And so, of course, Tether always preferred to look at the emerging markets because that's where the majority of the gain would happen, could happen. Now, in the United States, although there are less people that are underbanked, much less people than anywhere else, probably, and maybe not Switzerland, but almost anywhere else, and there is huge financial, there are almost perfect financial rails. The product has to be different, right? The product has to work in a different way. And so, yes, we are receiving, now that we announced that we are looking at the United States and we might, very probably launch a domestic stable coin very, very soon. Our aim is by the end of the year. We have enormous amount of financial institutions knocking our door saying, oh, can we partner? Can we do something together? Can we build it together? And that is great because I think that with Tether's distribution channel that we have both, or mainly the United States, if you will, already, but especially outside the United States, we can offer to every single financial institution that will work with us within the United States enormous access, unprecedented access outside the United States. That's the reason why these financial institutions are knocking our door.
So distribution is a huge selling point. It's not just the financial rails of it being more efficient. What these banks are looking at, one of my kind of frameworks for seeing why financial institutions, Wall Street, however you want to categorize them, is leaning so heavily in, is they now realize they can make money, right? There's new customers, there's new assets, there's new revenue, there's new profit that are going to come from this industry. It's coming from younger people. And also these younger people have assets now. And so they see this as a very long-term kind of growth center for them. What you're essentially showing up is saying, look, I have better rails so I can do things cheaper and faster inside the United States. But also if you partner with me, I can bring you to 500 million people globally that right now your bank or financial institution doesn't even know exist, let alone has any connectivity or potential of working with them. And so it's kind of the 1-2 punch of, penetrate in the US, but also actually help really export the financial services of these banks or financial institutions into these emerging markets using you guys as a distribution partner. That feels pretty powerful.
That is, we are going to open up the world and huge new opportunities that we demonstrated were extremely valuable and are extremely valuable. Look, until probably a couple of months ago, people were like, oh, why you work in the emerging markets rather than working in the United States? Well, look at our numbers. That is a good answer. Now, that is what we can bring to the table, and that is the reach we can bring to our partners.
Now, what you've mentioned a couple of times in this conversation, a domestic stablecoin. When I think of USDT or any of the other stablecoin competitors, I think of them being something that is agnostic to geography. I can use them in the United States. If I lived in another geography, I could still access them with an internet connection and use them as I saw fit. What is the difference between the current version of USDT and what you're calling a domestic stablecoin?
So I think that a domestic stablecoin would focus on, as I said, the very big difference between what is expected from a competitor also to all these fintech layers you have like Zelle, PayPal, and Cash App, and all that, right? So the US is a very, very, very efficient technological market. So we want to try different offering. We want to redesign few things that will be perfected for the United States. So I think that a foreign stablecoin and like international stablecoin that is designed for the emerging markets not necessarily will work the best inside the United States. And look, in the end, think about it. That is a question that they had a lot. Well, you have already one stable coin. Now will have two. Well, we have also Tether Gold, so we have three, right? And so in a certain way, you will double the number of US dollar stable coins that you have. Well, kind of yes, but keep in mind that there will be hundreds of stable coins in the US. So there will be plenty of new stable coins. So the only thing that matters is the user experience to move from one to another. What will matter is the distribution. The rest doesn't matter. If you have one that is one across the world, or you have two or three that are basically specific jurisdictions, that doesn't matter. The only thing that matters is distribution and user experience. And that is what we believe are best at.
Now, one of the things that's interesting to me is that Tether at different times has been popular on different blockchains. I think people a couple of years ago were very surprised to find that Tether's adoption on the Tron blockchain was very high because it was very cheap and people were using it across these emerging markets. I know at least one, maybe multiple projects that you all are either funding or backing and partnering with to create a stablecoin specific layer one blockchain to go and use this stuff. Can you talk about not just the stablecoin, but like this underlying infrastructure that these stablecoins are actually being used on in these blockchains? What do you think can be, improved or innovated on at the blockchain level that could actually be better for stablecoins?
So, look, I think that we have talked so many times now, so you know that I'm a Bitcoiner at heart, and I'm not a big fan of the rest of the crypto space.
Shocker.
That is the headline. And so the other thing that clearly is a win in terms of application of blockchain technology is stablecoins. Now, I think that there is an opportunity to create blockchains that are settled and the gas fees are exactly in stablecoins. So because again, everything is user experience. Like user experience is the biggest limiting factor today still to the usage of blockchain. Right, you have to buy a token, and then you have to basically use a wallet. You have to load some Ethereum in the wallet, and then you can then send USDT. It's a multi-step, and for a person that does not know anything about blockchain, is very problematic. Sure, you can do account abstraction, you can use many tricks, but it will never be as seamless as paying gas fees in a stable value. Rather than having also fluctuating cost of fees based on basically just the price of Ethereum, for example. And so that is a game changer, in my opinion. The fact that we are seeing a huge opportunity also with commodity traders. Commodity traders woke up and now they're all into stablecoins. They realize that the stablecoins are going to improve the efficiency and then the profitability of their portfolio and their balance sheet. So if a commodity trader has 1 billion in their portfolio, they will make more money if they can turn that billion around 10 times more. And with stable coins, that is not out of this world as a number, because you can start moving money in seconds rather than in hours or days or weeks. And that is so powerful. So even like commodity traders are very interested to not have to compete with dog coins, or cat coins or something else, right? And all these tokens for blockchain space. They want to go where they know that there is more like institutional usage, and they can use stablecoins as a gas fee, but also they can also settle transactions among themselves, among their counterparties in a more institutional, professional way. I think Genius Act will bring that institutional level adoption, and the blockchains that are going to solely focus on stablecoins and settlement interbanking settlement, intercompany settlement will have a huge advantage.
Now, I want to talk about what you guys are doing with all this profit. Last year, you guys did $13 billion in net income. You've already posted a significant profit in the first half of 2025. I'm specifically interested in maybe three different things. There's artificial intelligence. There's a lot of stuff you guys are doing with gold. And then there's the brain-computer interface that you guys have been funding as well. But let's start with the artificial intelligence. This feels like a huge theme, not only in terms of you guys making investment in other people's companies, but you all have started to build artificial intelligence products as well. Give us an update on what's happening on that front. Today's episode is brought to you by Xapo Bank, where eligible members can unlock the power of Bitcoin without selling it. Need cash fast? With Xapo Bank's Bitcoin-backed loans, you can access 40% of your Bitcoin's value, borrowing as much as $1 million for a full year with low interest rates, zero fees, and no early repayment fees either. Now here's the best part. You keep your Bitcoin, meaning you get to watch your holdings grow as the price of Bitcoin increases. Whether you're looking to buy a house, fund your child's education, or seize an exciting investment opportunity, these loans give you the flexibility to access cash without selling your Bitcoin. Unlike traditional loans, Xapo Bank's Bitcoin-backed loans have no minimum repayments, no early repayment penalties, and the flexibility to settle your loan in USD or Bitcoin whenever it suits you. It's liquidity entirely on your terms. Xapo understands the unique needs of Bitcoin holders. That's why they have developed a product designed specifically for you. With over a decade of experience in the Bitcoin space, Xapo Bank has been a trusted partner for those looking to make the most of their Bitcoin while keeping it safe. Your Bitcoin stays safe in your vault, untouched, never lent out, and secured in a global network of military-grade bunkers with cutting-edge security technology. Head to xapobank.com/pomp to learn more. That's xapobank.com/pomp. Go check them out at xapobank.com/pomp today.
Well, that is one of the projects I'm more obsessed with. It's called QVAC. The name comes from the pattern of names that Isaac Asimov used. Especially there is this short story called "The Last Question." Was written in 1956 by Isaac Asimov, and basically it's a beautiful short story. It's like 14 pages. It includes the meaning of life, religion, philosophy, physics, and artificial intelligence. So I recommend everyone to read it. And the idea behind QVAC is basically creating a platform that is a local first AI inference and fine tuning platform that can work everywhere, anywhere, from like an embedded device to a $30 smartphone to any flagship phones, every laptop, every server. We have a very unique and experienced team that is working on that. The idea is that data should stay with you, and you should be able to run models locally on your smartphone or your laptop anywhere, but even on the smallest devices, right? The smallest devices could be brain-computer interfaces, but could be also even a light bulb, could be a car, could be a motorcycle, could be a drone, could be a robot, could be a spaceship, could be a planet. I don't know, but you should be able to scale infinitely. So from the smallest part of the ecosystem to the biggest component of the universe. So basically, AI will be in 20, 30, 50 years embedded, in 100 years or 10,000 years, will be embedded in the fabric of the universe itself. And so it's unthinkable that AI will be remaining centralized and forever. Even if you want to bring AI on Mars, or you want to build or use LLMs on on Mars or on a spaceship, you don't have the latency will suck if you have to connect to the Earth where you built your gigawatt data center. So AI has to be able to be lean, has to be able to be very precise and modular and local, because latency matters. Latency between Earth and Mars is huge, so will not work. And even if you are on planes, even if you are in Africa, that latency will be terrible. And so we want to build something that adapts and grows and evolves with the technology that we are keep building. And humanity will keep building. So in the next 5 years, GPUs on mobile will be probably 10 times more powerful than what we have today, because investments will be massive. And so already today, we can run very ton of models already locally on the phones, given the experience that we are gaining with QVAC. And so imagine if we can do that today, in 5 years, it will be massive. And plus, given the peer-to-peer technology that we built with Hole Punch, now we can also connect all these AI agents that work locally among themselves without any central servers, without any bottleneck, without any controllers. So we want to build the first really decentralized, unstoppable AI platform. And one thing that I say from one Bitcoiner to another is that the thing that I don't like about using someone else's AI platform is that you become dumber, you don't become more intelligent, right? When I was a kid, I was like, my teacher was forcing me and forcing everyone to do calculations in mind, right? So you do addition, subtractions, multiplication, divisions, and also more complex operations in my mind. And but with calculators, I saw even today, like people do very simple calculations on their calculator. And so imagine what calculators did to our ability to do math in our brain. Imagine what AI platforms can do to our intelligence. And so at least I think as Bitcoiners, we should think about something like not your AI, not your intelligence kind of thing. And so that's what we want to fix at Tether. The beautiful thing is Tether has the resources to make it happen. Given the profits that we had in the past years, and we're going to likely keep having.
Now, when we think about this kind of like locally run AI, one of the things that I always go back to is almost every on a weekly basis right now, there's some AI model that gets published that is the best one, right? And so we saw Grok 4 go and kind of leapfrog everyone. They kind of constantly keep improving. If you are using things on a local basis, how important is it to have the latest model versus, maybe addressing some of the latency stuff? And obviously you'd want to have both, right? You want to be able to run it locally, have access to the best AI. So just like talk through some of the practicality of when you're in this kind of like innovation boom and things are moving so quickly. If somebody doesn't go and actually update, to the latest model or update the software, how far behind can they get? And like, how do you start to fix some of that stuff?
Well, it really depends what you need to do. I think that we are very early on the AI growth. So in the next 2-3 years, there will be open source. And again, I always never think about today or next year, because I think that for the next 5 years, centralized models will win. But I think within 5 years, the world will understand that either we create 100 gigawatt data centers, that I think is very impractical, and also will become a weapon and will become a target, and only works if the world remains stable, which I believe we all know that the world is going towards instability rather than stability. And so the reality is that we will keep improving. What is happening now with centralized data centers is just brute forcing AI. So we are trying to brute force intelligence. It's funny because we want to mimic the brain, trying to create this infinite and super power hungry data centers when our brain basically consume like energy as a potato. So it's in a certain way, to me, means that we have just the wrong algorithms. Like they're beautiful, they're great, but the research didn't stop, right? And will never stop. We'll keep improving our research. We are going to keep doing better things, and then eventually we are going to achieve levels of efficiency on large language models that, or even just will change the technology entirely that we cannot comprehend today. And AI will help that growth. So yes, so I believe that in 2-3 years, for 90% of the jobs that we will assign to AI, local models, even slightly outdated local models, will be perfect. And then for the rest 10%, you are going to you will try to use the bleeding edge models, the best ones, and so on. But what I believe and envision is, and with QVAC, is that everyone should be empowered to create very efficient small local models. And through our peer-to-peer technology, we want to connect all of them without masters, without any central servers, so that you can have algorithms that will run queries across all these models and trying to get the best answer. In a way, it's a more collaborative approach across all like a gazillion number of models, rather than having a huge monolithic model. And a certain way is like there is this book called The Cathedral and Bazaar. Eric S. Raymond, that shows the difference between, and explain the difference between having a monolithic approach, that is what is happening now between OpenAI, XAI, and so on, versus having a bizarre model or bizarre approach to models where like you have really a billion models that are all interconnected and will create incentives to collaborate among themselves.
How are you guys using artificial intelligence at Tether? Right. What we've seen now, recursive learning, we've seen Meta throwing around billion-dollar job offers to AI engineers. They believe that the software will start learning from the software. The code will start writing code itself. Like, what are you guys seeing or implementing now? You're notorious for having a very lean team, very profitable on a per employee basis. How are you guys using this new technology?
So we have hired, I think, among the best in class in engineers. We are looking at building eventually our foundational models, but first we want to build a platform that can run any model, and locally and remotely. Also, one of our main focus is to do local inference. That is very, very complicated on doing very efficient inference on mobile smartphones hardware, for example. But also we are engaging on federated inference through peer-to-peer federated inference. That is very unprecedented. So before starting to do very complex foundational models ourselves, we want to build the groundwork that is, in the end, as you said, every week there is a new model, and every week there is a new open source model. So sure, we could compete and create yet the 100th open source model every single week. But first, I think what we are missing is a platform that will able to run every one of them, is like the Sauron ring of the platforms that can run every single model and then scale to infinite number of nodes.
Now, that's for building an actual model itself, but are you guys using Devin, which is kind of this AI software engineer, or any sort of technology internally? Are people using like Claude to write code? Like what about like the individual engineers that are humans today? What are they doing on a day-to-day basis to help actually build the Tether product?
So we are definitely using code-assisted, AI-assisted coding. That definitely works. And also, first of all, we are testing all the different, both open and closed source models. And in the end, we are all going to open source all this stack, right? So we don't care. We want to make sure that we expedite our work, because there is so much to do, so much to build, that even 30% of gain is insane. So yeah, we are testing probably 10 of these things, and we are pushing every developer in actually improving themselves through AI-assisted coding.
All right, let's talk about gold. You guys have Tether Gold, but you've also started to do a lot of other things around gold as a product. I think there's folks who will hear this and be like, wait a minute, the Bitcoin guys, they're into the gold stuff. Explain what you guys are doing on the gold side and kind of what the thesis there is.
Well, I think that there is, I said that multiple times, there is nothing like Bitcoin. So Bitcoin is perfection. But I think the Bitcoiners mistake gold as a competitor to Bitcoin rather than a gold competitor to the dollar. Before 1971, gold was the backing of the dollar and all the other currencies, and then stopped, or paused, as they said at the time. And so reality is that gold is your edge against fiat, and Bitcoin is just perfection, right? So sometimes if you want, for example, if you're a trader, maybe instead of selling Bitcoin versus dollars, you could start thinking about selling Bitcoin versus gold. It's much safer if you want to diversify from Bitcoin, because you think you are like at the end of the cycle and maybe there is a crash and you want to just adjust your strategy to buy back Bitcoin at lower price. Probably is better if you sell it against gold rather than Bitcoin. And also it's true that gold is the thing that has been used for the last 6,000 years as currency over reset. If a financial reset would happen in the next 5 years, for example, we are not sure yet if Bitcoin will be big enough. Right? We know that gold is already is huge, right? It's like $20 trillion, so it has a bigger size, and so it's a matter of time, right? So again, Bitcoiners should understand that they should look at the world with in understanding basically that everything cannot happen tomorrow. Sometimes Bitcoiners complained about the fact that certain people in Africa are not using Bitcoin yet or enough, because they don't understand that certain people, certain certain villages, for example, or communities, they don't have the time yet that maybe a rich person in Manhattan can afford to learn about Bitcoin, right? So there is time for everything, and I think that when there is time, if the world will go to hell in the next 5 years, there is good chances that part of the reset will happen in gold.
Now, one of the things that Bitcoiners seem to be doing right now, they're not waiting, is these Bitcoin treasury companies. I know that you guys are part of 21, you, SoftBank, Jack Mallers, Cantor Fitzgerald. Rather than talk about that specific deal, because I know you guys are kind of going through the regulatory approvals to get that deal consummated, talk about maybe this trend in general. You've seen many people go and do this. Some of them are Bitcoin OGs, some of them are traditional finance folks. Obviously, Michael Saylor and Strategy have kind of pioneered this. You're now seeing geographic arbitrage, everything from the meta planets of the world to David Bailey and his team running around finding all these different markets. Like, how do you see the assault of Bitcoiners on public markets via these vehicles?
So I think Bitcoin treasury companies are very interesting, and I think if well done and properly, carefully built, they represent a huge opportunity. There is this kind of dichotomy between Bitcoin treasury companies and ETFs, right? So there are still, in many situations, not all the funds can or not all the companies can access the ETFs, and so investing in a Bitcoin treasury company is definitely a different option, for example. And so I'm a little bit worried. But because there are very, very much a lot, and in a certain of these companies, and in certain ways, is good because they all contribute to buy Bitcoin. But I see some that might be a little bit too aggressive and a little bit too risky. Leverage is going to be very, very important, and I think that there is eventually some will end up in flames. So to say that.
And is that because you think that they'll trade at a discount to NAV, or you think that they'll just literally get so over levered that they'll have to liquidate, or there'll kind of be takeovers, or like what is that?
The second
one is basically just like companies will actually blow up.
There will be a consolidation, I believe, in the future. But it's like happens in every industry, right?
Yeah. Talk about the brain-computer interface. I know this is one of your personal passions. You guys have been spending a lot of time and energy on this. What's the latest progress on building? Today's episode is brought to you by Simple Mining. Have you ever been interested in mining Bitcoin? As a miner myself, I've been using Simple Mining for the past few months, and the experience has been nothing short of seamless. I mine with the pool of my choice, and the Bitcoin is sent directly to my wallet. Simple Mining, which is based in Cedar Falls, Iowa, offers a premium white glove service designed for everyone, from individual enthusiasts to large-scale miners. They've been in business for 4 years and currently operate more than 20,000 Bitcoin miners, including mine. Their electricity is over 65% renewable thanks to the abundance of wind energy. Not only do they simplify mining with their top-notch hosting and on-site repair services, but they also help you benefit financially by running your operations as a business. This approach offers 100% bonus depreciation to optimize the profitability of your investment. Do you ever worry about the completion of maintaining your mining equipment? They've got you covered there too. For the first 12 months, all repairs are included at no extra cost. If you experience any downtime, they'll credit you for it as well. And if your miners aren't profitable at the amount, simply pause them with no penalties. When you're ready to upgrade or adjust your setup, their exclusive marketplace provides a seamless way to resell your equipment. Join me and many satisfied miners who have simplified their Bitcoin mining journey. You can even get started today with a 7-day miner trial. Visit simplemining.io/pomp to get started today. That's simplemining.io/pomp to get started today. With Simple Mining, they make it simple. Today's episode is brought to you by Bitcoin IRA. Are you a crypto investor with a retirement account but don't have any crypto in your retirement account? Listen up, this is for you. Bitcoin IRA is revolutionizing the way Americans save for retirement by helping smart investors diversify their savings with access to over 75 cryptocurrencies. With world-class customer service, military-grade encryption, and a vertically integrated licensed trust company, it's no wonder more than 200,000 Americans trust Bitcoin IRA to secure their financial future. Get started. It is quick and easy. It takes just 3 minutes to open an account. Once you're set up, their team of IRA specialists will reach out to guide you through every step of the process. Whether you're transferring an IRA from a legacy bank, rolling over an old 401k, or starting fresh with a new contribution, the Bitcoin IRA team is here to help you get access to real crypto in your retirement account. And here is the best part. As a Pomp podcast listener, you can earn up to $1,000 in rewards when you add funds to your account before tax day. Search for Bitcoin IRA in the App Store or visit bitcoinira.com/pomp to join 200,000 Americans on their journey to upgrade their retirement. That's bitcoinira.com/pomp to upgrade your retirement today. Talk about the brain-computer interface. I know this is one of your personal passions. You guys have been spending a lot of time and energy on this. What's the latest progress on building?
So there is the new technology that so we invested in BlackRock Neurotech. Is a great company. They have I think the best brain-computer interface technology out there. They have an upcoming version of their brain chip is just out of this world. They made a probably 100x improvement on the chip. They're based in Utah. They're a very lean team, as we like. Very humble, but basically they are the pioneers of this entire industry and technology set. The aim there is to make sure that the technology is pro-humans and remains pro-humans and will be used by people to improve themselves and also to create an hedge against the takeover of machines versus humans. You know, there is a very possibility. You said it, right? So AI will code itself. AI will improve itself. And if that really happens, which I believe will happen in the next 5 years, you know, there is this thing in technology called genetic algorithms. So it's like you know that, right? So you imagine a genetic algorithm run by an AI that will be able to select the winners and basically modify itself, improve itself like 1 billion times per day or per hour or per minute. Our brain will not be able to comprehend that. So unfortunately, our brain is digital, but the way we express anything in our lives is very much analog, right? Our fingers are analog, you know, typing on a keyboard, or our voice is very analog, right? So the way we communicate has been designed for an analog system rather than a digital system. And so if we want, I think in the next 15 years, the comparison between a fish and a human today is between a human and a machine. And so will be kind of like that. And so we need to be able to make sure that the humans can communicate with the mathematical coprocessor in their brain that will access to the digital portion of our cells. And we want to do that we want to make sure that doing so, all our thoughts, all our information will remain private. You know, as you know, this is the Bitcoin way to do things. We want to make sure that. That's also why local LLMs are very important. I think that, you know, the technology that we're building at Tether will allow the data of your brain be processed by your own device rather than, you know, in cloud by OpenAI, for example.
Let's talk about the macro economy. Obviously, that has been a huge driver of Bitcoin. Bitcoin has done very well. We still haven't gotten the latest interest rate cuts, but I think people think that will happen, you know, coming here shortly. We also saw all these tariffs that got announced. They seem to not have had the kind of catastrophic impact on the economy that people had predicted. Seems like, you know, unemployment is still pretty healthy in the United States. GDP is growing very quickly. Inflation didn't show up, you know, in kind of a severe way that people thought it would. How do you think about the macro economy right now? And, you know, what's interesting is you guys are builders and investors. So building is kind of agnostic to the macro economy, but the investing you may go faster or slower depending on what those economic conditions are. And so what's your current view on where we are from a macroeconomic standpoint? And are you guys doing anything differently as investors?
Well, first of all, we are, as I mentioned before, we're investing in gold, but also we have been investing in land and agriculture. I think is that is just to remind everyone is outside of the reserves of the stable coin, so it's done with the profits. And so we have been we're investing in very cutting edge technology like AI, brain computer interfaces, but a good portion of the portfolio is investing in Bitcoin, in gold, and in land and agriculture. Like those things are the things that will remain whatever happens. And I agree, the United States are now in a very strong position, right? So look at the deal that they got with Europe. And as an European, I can only laugh because otherwise I would cry. And it's I think it tells a lot about the discrepancy that is worsening across all the different countries, right? So all the countries before, in the last 25 years, everyone was talking about globalization. I think that is very much dead. Everything will go to localization. Every single country will look out for it for themselves rather than thinking about others. That will just increase. And so that will create a schisma. That will create definitely much more friction. And also will accelerate for the poorer countries potentially. There even more issues on their national currencies and weakening of their economies. And so that's something that we at Tether we are very much aware of. We are trying to build technology that at least will bring additional opportunities to the people living also in the less fortunate countries, right? So the point of USDT is bringing the dollar to the people that are living in countries where their central banks are taking very bad decisions. And so we are trying at least to give an option, a plan B to the people. Same happens with technology, with AI technology, with telecommunications technology that we're building. And so from the macro side, I agree that the tariffs where there was people were screaming and basically projecting the failure of the United States in just a couple of years. Definitely, tariffs are working very well for the United States, but everything is a zero-sum game, right? If they work very well for the United States, might not work very well for other countries, and we are living in the same world, so that might have side effects that are very hard to grasp and predict. And in my opinion, there is more likelihood that things will go wrong elsewhere.
One of the things that's interesting to me about this like macro backdrop that we're operating in is on the geopolitical front, it does feel like there's some fracturing or some isolation. The United States is saying, hey, look, we want an even playing field. And so we're going to put up these tariffs. We're going to really drive the reshoring of manufacturing and making investments here in America. At the same time that what feels like that fragmentation, we are seeing in a finance world where you all are bringing the US dollar globally. You're actually bringing more people, together in the US dollar. There's a ton of financial firms that are really excited about tokenizing public equities or, other assets that in their mind will open up access to what has historically been kind of US centric, markets and assets. And so it does feel like even though the geopolitical, kind of fragmentation is occurring, in a weird way, the financial assets are becoming more global and the borders are disappearing more, right?
Yeah, certainly for the specific US dollar, again, it's US dollar things that will become more global, and but the other countries are very much lagging behind. Think about Europe again. Europe tried to do a digital asset law much before the United States, and the result definitely is not great. And for the stable coins, I've been very vocal about, they had the opportunity to have hundreds of millions of people participating outside the Europe, participating to the European economy, buying European stocks, buying European debt, because technically if you buy European stablecoin, you would buy then European debt, exactly as USDT is helping the United States in that sense. But unfortunately, not every single country has been understanding the technology and the opportunity and potential. Look at what is happening in UK, right? So where like now to go on any website, even Spotify was reading, and you have to KYC, and then so just to verify your age. I can see, and I'm sure you can see how that can go very, very wrong and very soon.
Well, you know what's funny is when I'm in the United States, you can kind of go through different websites. Every once in a while, you get hit with a pop-up where, maybe you've got to sign into something or agree to something. If you go in Europe, the joke for Americans is like it takes you 5 minutes to get through all the pop-ups and the GDPRs and the agree to this, agree to that, deny this, whatever, and then you get to the website. And so it does feel like there is, even though the United States, we still complain about regulations and data controls and all these things. Europe just took it to the extreme, and so I come back to this idea, and I think you guys are like a perfect example, right? Most innovation, both in the United States and internationally, is driven by risk takers. And the definition of risk taker is taking risk, like doing things that may or may not work, that requires investment, that requires trying new things, pushing the pace of what is potentially possible. There are certain cultures like the United States, which even though we have lots to improve on, seem to be very encouraging of that risk taking, the capitalistic system, the ability to fund this stuff, obviously venture capital, et cetera. Europe and maybe some other places in the world feel like they have essentially disincentivized risk taking. And to me, like that is the story of why you get different results in these different geographies is like, are the politicians, are the people creating the rules and the kind of conditions trying to encourage risk taking or trying to disincentivize it? And the people kind of follow the incentive system, right? Like if you're in a place where they don't want you to take risk and you're a risk taker, you go somewhere where they're encouraging you to take risk. And so in a weird way, like you guys are unique in that you actually stayed in a place where there wasn't as much risk taking, and you have succeeded by taking an immense amount of risk early on and being very smart about not getting complacent and kind of continuing to push the pace of innovation, it looks like.
Well, if you build an industry, for every new industry, you have to build something that does not have roads yet, right? So you have to do it in the safest way possible. You have to be working and trying to explain what the hell you're doing. But yeah, I mean, with at the beginning, cars didn't have roads, and then there was no low code for driving a car. And then it happened, right? So every single innovation and invention is the same, right? There is this paper, like a newspaper from the 18th century that had all the, was trying to push against the proliferation of electricity in the cities and was showing people hanging the cities through these electric cables, right? So, you will always have this thing, and imagine when you touch finance, even more so, right? So it upsets many people. But it's fun. I mean, in a certain way, I feel like a little bit Forrest Gump, right? So we dodged the bullets and we kept running, and now we're here.
All right, this is the hardest question I've ever asked you. You're a good-looking guy who's successful, who's built this amazing company. What problems do you have? What are the biggest obstacles that you face? The one thing you've ever told me is sometimes you don't get a lot of sleep because you got, so many different things going on. People are constantly messaging you problems, et cetera. But what are the other big obstacles, whether for you personally or for, kind of Tether more broadly? I think people are very drawn to the story of success, but it's important to remind them that there are, many obstacles that you guys still face and you're trying to figure out. So like, how do you identify maybe what the biggest things that are the challenges right now for you?
Well, my personal challenge is that I have only 24 hours in a day. And that is it's a very annoying challenge because, I have a lot of ideas and I need to either clone myself or have Paolo's AI, a local AI that will help me. But I think one of the things that I think is not challenging, but I think a lot about when in Tether is that Tether was born with the mission of bringing financial inclusion and bringing, improve in a certain way society in certain aspects, like with the again financial freedom, access to more free access to wealth and all that. And we are trying to do that in multiple other areas now. What we learn about in finance with USDT and cutting intermediaries, we want to do it with tech, with whole punch kit and all this AI platform, all that. So first of all, the biggest challenge is, we have so much to do, and so we have. I think the mission is so big. I've defined ourselves as once in a century company where we have the opportunity with our profits, immense amount of profits, that we could do is use in two ways. One way that is not us, right? So companies would distribute all the money to the shareholders so they can buy a bigger yacht. That is not us. We want to use these profits to keep reinventing ourselves and build something even crazier and more innovative, and in all the possible other fields. So that is the biggest challenge, right? So how we can keep reinventing and keeping innovating on other fields, and bringing the same passion and the same ethos and philosophy that we had elsewhere. And the second one is kind of weird in a certain way. I think that, I remember when a certain company, the first motto was "Don't be evil," and then kind of to me they turned evil, or they betrayed the initial philosophy. And so, how I can protect, how when I build technology, how I can protect the users of that technology from even myself, right? So, how we can make sure that we don't turn evil, or we don't have any incentives to turn evil, is going to be very important. So that I think about that a lot.
Well, it's pretty inspiring, when you're creating $13+ billion of profit a year and you say, hey, we want to use this to continue to fund innovation and push the pace of what's possible. One, it's inspiring to people, but also two is you're going to win some, you're going to lose some, but the winners really, really are going to have a profound impact on individuals and society because you guys can take risks that maybe others can't since you're funding it. Right. I think one of the things that people forget is so many innovations don't come to fruition for a long time because you not only need the entrepreneur and the team to build it, you need someone to believe as the capital provider. But when you're able to hand the capital to the people who actually have the ideas and can build, like in this case, certain things get funded that maybe otherwise wouldn't. And therefore you can really push, kind of what's possible, which I think is so exciting about what you guys are doing.
Exactly that. Well said.
All right, my friend, where can we send people to find the Tether attestation? I think that's probably the most interesting place to send people who are kind of more interested from an investment and business perspective. Where can they go to see that?
Go on tether.to, and then in the header, you will find the transparency page, and then you will find the attestation. We just released that yesterday, was a very good one. Good profits, and we grew 13.4 billion in terms of USDT market cap in the last quarter, 20 billion from the beginning of the year. We put $100 billion between us and our main competitor. That is a huge testament of trust in our product. I'm very, very bullish also for the rest of the year.
I keep telling you, 200 billion USDT market cap's incoming. So let's keep up the great work, and we will do this again soon.
Thanks, Pomp.